Welcome back to Tech I Spy as we look into an interesting raw materials tech company. When you look at the North American metals landscape, you eventually arrive at a company that sits at the crossroads of ambition and operational fatigue. Coeur Mining Incorporated is one of those names that has lived through the full emotional cycle of a mining stock. Hope, expansion, frustration, reinvention, and the quiet resilience of a firm that refuses to leave the stage. It is a precious metals producer with assets spread across the United States, Mexico, and Canada, with a long history of trying to squeeze value out of gold and silver at times when the market barely rewards the effort. In many ways, it behaves like a mirror held up to the wider mining sector. The fortunes of this company rise and fall with commodity cycles, investor attention, and the difficulty of mining itself. Today we look at Coeur Mining through the lens of our structured narrative SWOT framework, taking the time to examine the reality behind the story, the technology behind the operations, and the long arc of potential paths ahead. Strengths. Coeur Mining has one of the most geographically diversified portfolios among mid-tier American metals producers, and this gives the business a degree of insulation from political disruption. The company operates the Kensington Gold Mine in Alaska, the Rochester Silver and Gold Mine in Nevada, the Wharf Mine in South Dakota, and the Palmarejo project in Mexico. These sites give Coeur broad exposure to different grades, different regulatory climates, and different logistical realities. For investors, this means the company is never relying solely on a single asset to carry the year. A second strength lies in the scale and modernization of the Rochester mine. Rochester has undergone a significant expansion project, representing one of the largest development phases in the company's history. Once fully optimized, the mine is positioned to deliver stronger throughput and lower costs. This matters because silver producers often live on razor-thin margins, and every improvement in processing efficiency translates directly into healthier cash flow. Coeur has also built considerable operational experience over decades of running difficult assets in difficult terrains. This gives the firm something that cannot be copied quickly: institutional knowledge, a sense of the geology, a realistic understanding of costs. For all the criticism that mining companies attract, Coeur's team knows how to run long-lived assets and keep them productive even when metal prices are soft. Finally, there is the value of being a United States-based operator. Domestic mines receive investor trust during turbulent times, and Coeur's profile often benefits from the growing interest in securing North American sources of strategic minerals. Weaknesses. For all its operational discipline, Coeur Mining suffers from a long history of financial volatility that has made many investors cautious. The company has struggled at times with high costs, thin margins, and the burden of debt. Even when metal prices rise, the gains have not always flowed cleanly to the bottom line. This has created a perception problem. Many investors see Coeur as a company that must work twice as hard to achieve the same level of profitability as peers. There is also the reality that silver has been an unpredictable commodity for a decade. Silver is pulled in two directions: as a precious metal and as an industrial metal. Demand spikes and collapses with global manufacturing trends, and this makes planning difficult. Coeur's silver exposure, particularly through Rochester, sometimes leaves it vulnerable to sudden downturns. Operational setbacks have also been part of the company's narrative. Delays, cost overruns, and lower than expected grades have all appeared over the years, slowly eroding patience in the market. Even the Rochester expansion, although promising, has required significant capital and has not yet delivered the full financial transformation that many investors hoped for. And finally, Coeur's share price history has created a psychological hurdle. Investors who bought during past peaks have endured long periods of underperformance, and this memory affects how new investors perceive risk. Opportunities. The biggest long-term opportunity lies in the potential of the Rochester expansion to become the engine room of the entire company. Once fully optimized, Rochester could drive a meaningful shift in production scale and cost control. Silver demand is projected to rise as renewable energy, electrification, and industrial applications expand across the world. Coeur will be well positioned if it can deliver reliable output at competitive costs. The company also has an opportunity to leverage its North American footprint. As geopolitical tension pushes countries to secure domestic metal supply, mines located in the United States become strategically important. This could open the door to partnerships, premium valuations, and a stronger bargaining position over the coming decade. Exploration presents another path forward. Coeur has prospective land packages around its existing operations, and any meaningful discovery could extend mine life and improve long-term economic performance. Investors reward companies that add years to their mine plans without relying on acquisitions. There is also the broader commodity cycle to consider. If gold and silver enter a sustained bullish period due to currency pressures, inflation, geopolitical tension, or central bank behavior, Coeur could see significant upside purely through leveraged exposure to these metals. Threats. Mining is a business that carries constant structural risk. Coeur must contend with the possibility of lower ore grades, rising energy costs, and unforeseen operational issues. A single year of poor production can force companies in this space to raise capital, take on more debt, or delay development plans. Metal prices remain the biggest threat. Gold and silver can correct sharply during periods of economic optimism or aggressive interest rate cycles. When prices fall, companies with thin margins feel the pain first. This is precisely the environment in which Coeur has sometimes struggled to satisfy investors. There is also regulatory and environmental risk. Mines can face scrutiny over water usage, local community impact, and land management. Any new restrictions or disputes could delay output or increase costs. Currency movements may also affect profitability. Coeur's Mexican operations are exposed to fluctuations between the United States dollar and the Mexican peso, which can alter cost structures in unpredictable ways. And finally, the company faces intense competition from more efficient global producers with lower cost bases. Investors can choose from dozens of gold and silver stocks with stronger balance sheets or simpler operational profiles. Coeur must work harder to stand out. Conclusion: Coeur Mining Incorporated remains one of the more intriguing mid-tier precious metal producers in the United States. It is a company with valuable assets, deep institutional experience, and a strategic foothold in North American metals. Yet it is also a company that has battled margins, market expectations, and the inherent challenges of mining itself. The story of Coeur is not a simple one. It is about resilience, reinvention, and the hope that a combination of operational improvement and favorable metal prices can finally unlock the value investors have been waiting for. If Rochester fulfills its promise, if gold and silver rise meaningfully, and if the company can demonstrate consistent cost discipline, then Coeur Mining could evolve from a cyclical survivor into a genuine growth story. Thank you for watching this TechEye SPY analysis. If you enjoyed this deep dive, please like, subscribe, and join us again tomorrow for another episode.